This morning it trended all up right here from 22 up to a high of 33. We top out and then we go into this consolidation. This is what a lot of traders would call something like the ABC pattern or ABCD pattern. So it'd be like this, and I'm going to put my A right here, and then B is going to be right here, and then C is right here. So this is something a lot of traders would call ABC pattern. I forget if there's a D involved. We're all different. The way all these patterns work, you guys, is all of us see these same patterns, and they've been the same for years and years and years, hundreds of years. They've been the same patterns, but people recognize little characteristics. They put their own little twist on it. They repackage it, and then they try to sell it to you as if it's a new strategy or something new people don't know about. But bottom line, at the end of the day, these patterns are the same. Everybody sees them. There's nothing new about these patterns. So the ABC pattern is a stock that has a nice morning run, like right here. That's your A. And then your B is lunch hours consolidation. And you could see here with this, the stock topped out and then it formed this wedge right here at VWAP. It held above VWAP and it formed this wedge here starting at just before 10:30 all the way up until 12:30. So 2 hours, this stock consolidated and wedged out right here. And from that 28 bucks and holding above this yellow line, which is the VWAP, it starts to grind up and pick up, starts to lift up to the highs, the high of day right here. It's a nice little micro pullback. And then from there, that's when all the volume starts to come back from lunch. And it's as the saying goes, and this isn't something I can just teach you to be comfortable with, but the saying goes, if a stock is in a pattern or a consolidation, once it chooses a direction, whether that be up or down, chances are it's going to continue going in that direction. So after this stock consolidated and wedged out here for 2 hours, it rested, it picked a direction, it starts to trend up, test its highs. Chances are it's going to continue to keep going. And big picture ideas like that help you mentally to feel comfortable holding on to these types of plays. And the more you do it, the more you realize this and you see it time and time again. This is when it's like a self-fulfilling prophecy and you start to trust in what you know and you focus on the big picture at hand. All this volume starts showing up. Now we go into the C part. We start ramping up here from 28, 29, all the way up to a high of almost $50 a share. That's a wild move there. Once you get your euphoric explosion here, stock, once again, it has to take a break. So we start to pull back. We're pulling back, and there's a few ways you can do this. You could measure from the low here where it was consolidating at, measure with your Fibonacci retracement up to the high right here. Let me get out my Fibonacci retracement. Measure from the low here up to the high. And as you see, when the stock started to retrace here, it retraced right here to this 38.2 level right here. Then it bounced up and it was finding resistance at this 23.6 retracement level. Then it fell down and it fell right through that 50% and it held up right here at the golden ratio, that 61.8 level. But with Fibonacci retracement, it should be a tool for you to use and not be afraid to use and experiment with. Measure these types of moves and you get an idea and you visually learn better on how these stocks like to move up and then retrace down through levels. It's a real super handy tool to have in your back pocket. So that's the ABC pattern that a lot of people out there trade, and it's a very textbook pattern. And this was Friday trading. Now let's fast forward into today. I see that INDO is halted. We scroll out. We either exploded up or this stock, yep, it just exploded up